Escobar, certified financial planner with Mariner Wealth Advisors. You're listening to Your Life Simplified, and today I am joined by Christina Lynn, practice management consultant here at Mariner. How are you, Christina?
Hey, Valerie. I'm great. How are you?
I'm wonderful. I'm so excited to have you here today because we are going to talk about things that are just difficult to navigate. In my opinion, the title of today's program is Navigating Conflicts Between Spouses. But I think really it's navigating conflicts. It could be any, family members, partners, whatever it is. And so I guess first thing I want to just touch on is just telling us about you. Your background is in financial therapy, but what exactly does that mean?
Yeah. Well, thanks for having me on the show. I'm happy to be here. So, my background is in financial planning. I'm a certified financial planner. And just along my life journey, I've been really interested in furthering my education. And that journey led me to studying financial therapy. I'm just about finishing my doctorate in financial planning, and the university that I attend, they're known for financial therapy. So it's just sort of been embedded in my education, and I'm just around professionals who are also involved in this space. So I just really enjoy talking with them, and I guess you could say it's sort of rubbed off. I also had a mentor in the space, in the financial therapy space. I will disclose, I don't put myself out there as a financial therapist. What I think that the financial therapy space is really hoping to do is to get more financial planners who just know about what the financial therapy space is all about and start bringing that conversation to the table with their clients and normalizing it a little bit. It's not that we need to become therapists.
Yeah, that's funny you say that because I certainly got into money because I thought, money is cut and dry. We put money in and we take it out, we make it grow by a factor. And so this is a really easy type of field, I suppose, that the math just works out. And then as I'm, how do we look at it? So yeah, I'm guessing that you
Yeah.
see that too.
Yeah, it's so true. Our firm is known for income tax planning and estate planning, and we can come up with the most incredible solutions that are, that save money and they are innovative and brilliant. But then clients don't carry out the recommendations that we
hmm
provide, or it takes them too long and they miss out on things, or there's just this whole host of other sort of routes that they take that aren't exactly what we recommended, or not at all. And that is exactly what you're talking about. It's not so much about the numbers, it's everything behind the numbers.
Yeah, absolutely. Well, specifically today for our conversation, I wanted to focus a little bit more on divorce. Um, we're talking about money. So, how often, maybe not just necessarily your experience, but in the data, do you see that money and conflicts of the way that money is handled is a source of divorce?
Well, in all the cases I've come across. So,
Sure.
I will I want to, back up a step, and, people were coming to me for help with divorces, and so I'm also a financial advisor, was at the time. So,
hmm
of course they were wanting to talk to me about money, but I mean, money is just it touches all the areas of our lives. And so when you're going through a divorce, you're dissolving all those marital assets. So, yeah, it really, it's the kids and money are the primary,
Hmm. Hmm.
balls of yarn to unravel in a divorce.
Yeah, yeah. And so I don't know that my wife is too controlling or she doesn't participate enough in our financial matters, or what kind of trends do you see in the data?
Yeah, that's actually a great point. I looked up some data points on this because I just didn't want to say what I happened to see. I wanted to,
hmm
get a better sense of actually what was going on in the space. And so it varies if you're talking to the husband or the wife. So some of the predictors for husbands were perceptions of a spendy wife. So does that kind of make sense to you? Like, hey, I think my wife just goes off and spends all of my hard-earned money.
Mm-hmm.
That is, the research says that is a predictor of divorce. Some other ones are having financial worries, reporting a lower income, having 3 or more children,
Hmm.
or having a wife that thinks that he is too spendy.
Okay.
So I'll stop there. Do those make sense?
Yeah. I mean, those definitely resonate. And I think the thinking that the other spouse is too spendy, it's not necessarily the case. Is that kind of, I mean, that's sort of what I've
Yes.
seen in my experience, that the actual data doesn't back up the feeling.
Totally agree. Perceptions is the key word there.
Yeah.
Um,
Right. And so, with that being the case and just saying, my wife is too spendy, how do we, I guess one of my thing is, where do we quantify this, or does quantifying help? Because if you're saying, well, what does too spendy mean? If I get, a new pair of shoes once a year, is that too much? Or am I okay to get 20 pairs of shoes in a month? How do we differentiate that?
yeah. So I'm going to answer your question with the pairing of what we were just talking about, what's causing wives to want to get divorced. And one of the top reasons for wives was feeling a lack of communication with her husband. And so it may lie in lack of communication. So the husband just assumes that the wife is spending too much, but the wife maybe is trying or not trying to talk. There's some sort of barrier with the communication process. And so I have a couple of ideas that we'll either talk about in part 1 or part 2 of this episode. But I think it just boils down to communication.
Yeah. No, then that's super interesting. When we are, I think I'd like to go ahead and jump into that. Like, how do we have that conversation? How, where is that conversation breakdown, or what do we do to facilitate that?
Yeah. Well, let's remember our role. So we're wealth managers. It's not our job to become their therapist, but we can really level up what we're doing as wealth managers by being sensitive towards this sort of thing and not just closing the door to it. Because think of it from our client's perspective, they're kind of in a tough spot because their wealth manager doesn't want to talk about feelings, but their therapist doesn't want to talk about money.
Great
So
point.
it's like, well, we can do a better job for our clients by at least becoming more comfortable to not shut the door on this conversation. So again, I want to stress that we're not, our interest is not to go out there and have our clients sit on our couch and talk to us as they would a therapist, but we want to be open to discussing, like, scratching below the surface and trying to get at some of the core issues that are going on here to help our clients, to facilitate that conversation like you were mentioning. So do you want to hear some ideas that I have? Or
I absolutely do. I was going to say, what are like specific questions maybe that could be asked, or what are ideas you have?
And I'm sure you do too. I mean, we all have good ideas. So I'll start with mine and then we'll see what you think.
Okay, perfect.
And I have to give credit to Dr. Megan McCoy. She's a financial therapist. And so I don't want to say that any of these ideas are my own. I think a lot of them come from either her recordings, or she also wrote a book chapter in the new Psychology of Financial Planning book. So one of the ideas was that when we're having financial conversations, it's often during a time of like heated tension, right? And that's not the time to communicate about, here are the things I'd like to talk about. As you just cannot be civil when you're dealing with a tense conflict, or you're am I making any sense by saying there's a difference?
So meaning like, so, we're trying to plan a vacation, and I hate the snow and you hate the beach. And we're fighting about that. And also, let's go ahead and dive into money while we're at it.
Yes. Yeah, that's a great example of the vacation. So I'm going to try to come up with an example to give some
Yeah,
context around it.
perfect.
So if the husband notices a large purchase on the credit card bill that he wasn't aware
Mm-hmm.
of, and he comes home and talks to the wife about, hey, what is this? And the wife gets defensive, and there's
Mm-hmm.
um, that that causes like this heated discussion about it. That is not the time to have a constructive conversation about budgets and how we want to, what are our savings rates for retirement, and what about this other, life goal that we want to save up for. Do you agree with wanting to save up for a second home? Or, how do you feel about supporting, helping pay for your parents' long-term care expenses? It's I hope that example of trying to tackle things in a progressive sort of assertive way like that, it can't be
Mm-hmm.
done under stress. It needs, like,
Okay.
try timing it out. Like, hey, at the beginning of each month, every Sunday night, we're gonna pour a glass of wine and we're gonna go through our bills and just discuss questions. And then maybe you also have an annual meeting that you look forward to, where you're comparing the balance sheet year over year. Like, how have we been? Do we meet our savings goals? What are trends
Mm-hmm.
going on? That sort of thing. So I think what I'm trying to say is be proactive versus reactive.
Yeah, that's a great point. And I mean, I think that's probably one of the roles that as financial planners we help play, right? Is that we're saying, okay, this is to have an open conversation about this, and we're not here to air grievances, I would say, right? Would you agree? We're just here to talk about numbers and what is it we're trying to accomplish. And so how do I open up more space to them, maybe? Or like, I don't know. Do you have a suggestion there that what's that line
Yeah.
between being a therapist and just saying, I want to allow for more space?
Well, to directly answer your question on that, where are you comfortable? Like, if you're going beyond where
Mm-hmm.
you're comfortable
Mm-hmm.
with, then you've gone too far.
Okay.
Another way to
That's a
answer
great
that
point.
is, you can only take a client as far as you've taken yourself. My mentor used to say that.
That's a great point. Yeah.
Yeah. So if you haven't gone through like if you haven't done the self awareness exercises and some of these self development exercises, you're not going to be comfortable leading your client through them. So that's another thing
Mm-hmm.
to consider. Do you want to hear? I think I have two other kind of ideas to help answer your question about how do we facilitate these deeper level conversations. Do you have time for?
Yeah,
Okay.
I do. Yeah, we do. And I think maybe one caveat or one thing to add to that I'm really curious is from the client's perspective, how do they gauge whether or not their planner is of the mindset of the ability to open up space for them? And maybe that's something we can touch on if you don't have an answer for that, because I really want to hear your other examples and ideas.
Yeah. Okay. So if I'm hearing you right, it's how do you know if how does your client know if they can trust you as their advisor to lead them in a conversation at this level?
Yeah, yeah.
Okay. I think it goes back to what I said, like, what is your comfort level? Like, if you are not
Hmm.
comfortable talking about feelings or spousal conflict about money, this is not going to go well for you. You should avoid it.
Right.
But you could,
Yeah.
perhaps there's somebody on your team that like naturally is more gifted at having some of these conversations with. So let's say, Valerie, that you're that person on that team. Maybe you can pair with somebody else on your team to join meetings where you want to have this sort of conversation.
Hmm. And I would say too, I would add that as a client that's coming in and they're trying to understand, or at least maybe gauge the relationship with their prospective planner, I always just advise people to go with your gut. Like,
Yeah.
do you feel like you're comfortable talking to this person about things that not just the balance in your checkbook, but about I have a spending habit, or I don't trust my spouse or something like that, and just help you understand why these things are being implemented, then it's really for naught.
Yeah. Okay. I want to respond to that. So I
Yeah.
think you're so right, Valerie, in that intuition is really a helpful guide in this area,
Hmm.
which actually is usually not the case when it comes to your money, right? We like
That's
in
a
no
great
other
point.
area do financial planners say, oh, just go with your gut, because that's usually the opposite thing that we should be doing with our money. But when it comes to, feeling out if you're comfortable having this sort of conversation with your financial planner, that is a safe thing to go
Yeah.
with.
Oh, I love that. I love that. Um, Perfect. Well, let's go. I kind of sidetracked us, but as far as a conversation or some of the other examples.
Yeah. Okay. I have two, and then I want to save the third one for the next episode. So
Perfect.
a quick, easy one is naming your savings account. So this
Oh.
is employing is employing mental accounting. So
Mm-hmm.
mental accounting is just the imaginary separation of different funds for different purposes.
Mm-hmm.
And so you can do this, be as literal about this as you'd like. So I'll use myself as an example. So I have
Mm-hmm.
probably 10 bank accounts, and I have them all named something different. And each account has a different purpose.
Mm-hmm.
So one account is to save up for my vacation fund. Another account is to save up for my dream house, and so on and so forth.
Mm-hmm.
And by naming these accounts, it it helps me kind of keep my eye on the prize. Like, why am I
Mm-hmm.
keeping the money in this account and not tapping into it every time like money gets tight and I need like an extra $100 or something that I want to spend? There's
Mm-hmm.
just something about siphoning it off into these different buckets that have like a predetermined purpose that is attached to some emotional connection or goal that I have already pre-assigned it. And when you do that within couples, it facilitates being on the
Yeah.
same page, because one couple might see $10,000 in one savings account as fair game to
That's a
tap
great point.
into when there's a need, where the other spouse has a completely different
Mm-hmm.
assumption about it. Like, we never go into those funds. What were you thinking? But in all
Right.
fairness, I mean, who's right? Right? Both parties think that they're right. And it's not until you formalize that a little bit by assigning that mental account like label onto it and getting buy-in by both parties is when it helps that to get the both spouses on the same page. So does that make sense to you?
Yes. I think what I love the most about that is that, it avoids conversations that it's not like, hey, can I
Yeah.
buy X, Y, and Z? Like, it's already
Hmm.
decided, and so this is like, it makes it so much easier. That's
Yeah.
great. I love
And
that
you can
one.
boil that tip down to a micro level too. So one question I hear asked often is, well, can spouses have different accounts where
Mm-hmm.
like
Mm-hmm.
this is my fun account and this is your fun account? I mean, there's no right or wrong answer here, but when you break it down to that level, and let's say that each spouse gets, $500 or whatever is in your budget, like
Mm-hmm.
each of the fund accounts gets funded with the same amount or varying amounts depending on your
Mm-hmm.
situation, that they can spend with no strings attached and not having to supply that explanation to their spouse, but both being transparent about it, like there's no hiding anything.
Mm-hmm.
um, that can also be a solution in certain situations.
Yeah. That's amazing. And that is something I want to dive into. I think we have to stop for today and wrap up
Okay.
our part one. But I do have a lot more questions. Listeners, please be sure to tune in next week, because we are going to continue this and provide more ideas for making sure that you and your partner have lots of peace in your home. Be sure to subscribe wherever you're listening, and we will talk to you soon.
Mariner Wealth Advisors, or MWA, is an SEC-registered investment advisor with its principal place of business in the state of Kansas. Registration of an investment advisor does not imply a certain level of skill or training. MWA is in compliance with the current notice filing requirements imposed upon registered investment advisors by those states in which MWA maintains clients. MWA may only transact business in those states in which it is notice filed or qualifies for an exemption or exclusion from notice filing requirements. Any subsequent direct communication by MWA with a prospective client shall be conducted by a representative that is either registered or qualifies for an exemption or exclusion from registration in the state where the prospective client resides. For additional information about MWA, including fees and services, please contact MWA or refer to the Investment Advisor Public Disclosure website at www.advisorinfo.sec.gov. Please read the disclosure statement carefully before you invest or send money. The views expressed in this podcast is for educational purposes only and do not take into account any individual personal, financial, legal, or tax considerations. As such, the information contained herein is not intended to be personal, legal, investment, or tax advice. Nothing herein should be relied upon as such, and there is no guarantee that any claims made will come to pass. The opinions are based on information and sources of information deemed to be reliable, but Mariner Wealth Advisors does not warrant the accuracy of the information. Asset allocation diversification is a strategy designed to manage risk, but it cannot ensure a profit or protect against a loss in a declining market. Certified Financial Planner, trademark, CFP, registered trademark, and federally registered CFP with flame design marks, collectively the CFP registered marks, are professional certification marks granted in the United States by Certified Financial Planner Board of Standards, Inc., also CFP Board. The CFP registered trademark certification is a voluntary certification. No federal or state law or regulation requires financial planners to hold the CFP certification.